and Greg was talking about Mother Nature. I'm going to talk about Father Market, and they're both fairly fickle, but I'm going to try and deliver some ideas to you that may not have ever crossed your mind before. I'm here with Stuart Hedger, who's directing our operations in California, consulting operations, and I will talk about long grain, and then Stuart will talk about medium grain and wrap things up. Thank you very much, Greg. It was very interesting. I've been to Greg's farm, but it was before he had an iPad, so I got to get back now that he's got an iPad.
Surface Pro.
Surface Pro, excuse me. I'm an Apple kind of guy. I'm going to introduce something that may never have crossed your mind before in Rise. So I invite you to use some of your imagination in what I'm going to present to you. And this is the first time I've presented it to anybody in the world. So you're sort of the first people that I've talked to about this. And what it is it's a different way of looking at the rice market and in a different perspective. I'm going to talk to you about the history of commodities in the next 5 minutes, and then I'm going to see where rice fits into it, and then we're going to go into the traditional outlook, okay? I have 35 years in the industry, 18 of that as a major buyer of rice in the US and elsewhere, and then the last 18 years I've advised companies all over the world. And we have, in addition to this presentation, an annual report we can send to you if you give us your business card, which will help unfurl what I'm talking about here. And I would love for you to do that. Our service is read by most of your buyers. So if you take our service, you will be listening and reading the same thing that your buyers do. That's one of the reasons why people are attracted to what we do. Why is that? Because we do a good job. We do a really good job. We have farmers, we have millers, we have traders, we have governments, we have regulators that take our service. And I'm a little dry in my throat. Could someone get me some water? Would you mind getting some water, Josh? Thanks a lot. Oh, I want Josh Smallwood. He's working with us in California as well. I'm trying to figure out how to begin, since this is such a different topic from anything I've talked about before. I think the solution to it, thank you very much, is to reference one of my customers who'll be here tomorrow. I see some friendly faces out there. And when he was 13 years old, he went to an evangelistic revival in Arkansas, and the guy that ran it was an 8,500 acre farmer, which in those days was very big farmer. And he said during the talk something you probably heard before, but it's prophetic. He said, I will trade a bushel of soybeans for a barrel of oil with the Saudis. And if they don't like it, they can drink their oil, and I'll eat the soybeans. We've heard that many times. That is coming into play now, and that's the purpose of my talk, is to present the forces at work. The House of Saud is going to be selling off parts of Aramco. Aramco is about 10 to 20 times the size of Apple, which is the largest company. No one knows how wealthy and powerful they are because they kind of keep it to themselves. In addition to that, within the next 5 years, I believe you won't be asking the question, is China going to buy our rice? The question is going to be, the question is going to be, which city in China is going to buy our commodities? Because there's going to be civil war in China, and everything south of the Yangtze is going to break away from the north. We are living in the most interesting times right now. And this has all begun to happen because of demography and things that I won't discuss today. But trust me, we are going to go into the most remarkable period for agriculture the world has ever seen. My book is about the white stuff. And on Horizon Ag, that's where I got this from, the white stuff is important. Can we try and sharpen it a little bit, the thing? And the blue stuff is water. We can't use it, but it's there. And there's darkness around the back. And that darkness is what I'm going to talk about today. The stuff that you don't normally focus on, which is the bigger world, okay? I believe that we're going into the fifth empire. By here, I don't mean a Star Wars empire. Anybody seen Star Wars? Sorry. Anyway, this is not the empire I'll be talking about. I'll be talking about an empire more like what Greg talks about, of earth and dirt, and on this planet Earth. And the things I will talk about come out of this earth. Next slide, please. I'll just read it to you. Since Columbus discovered the New World in 1492, the last 6 centuries have been ruled by 5 commodities. We now enter the 5th empire of water as we move out of the control of crude oil. In Asia, rice equals water. Both water and rice are peaking. The next 100 years will be set in Asia, not in the Western Hemisphere. What happens in Asia is going to change everything here. And we're on the edge of major change out there, and it's all about water. Okay? So I've given away 2 of the 5 commodities, but I want to go back and ask a question. Does anyone know what the first global commodity was in the last 1,000 years? The hint is in Christopher Columbus. He came to the New World by mistake. He was on his way to India to look for gold and silver, and he found spices, and he found the tropics of the West. That altered a very important trade, which was spices. That was the first global commodity trade with spices between Asia and Europe. It cost more for spices than food in Europe. The spices were a preservative. Hold on a second. What was the next one after spices? Does anybody know? It lasted 100 years. It was sugar. What was the next one after sugar? It was cotton. Out of Manchester, England, not Chicago. Made fortunes for people. And the next one is crude oil. The Saudis got rich off of it. Trillions of dollars in their till. And the next one is water. What I'm going to do is talk to you about the transition between these commodities. There's a template. This is part of a new book I'm writing. There is a template to these empire commodities. I'm sorry the aren't one of them. I'm sorry oats aren't one of them. Wheat isn't one of them. It's rice because of its connection with Asia. The commodities, empire commodities, change the way in which things trade globally. They make fortunes for people, and they end up with substitutes. The substitute in spices was to grow them in the New World, got the price down, so it was less than food. The next one, sugar. Let's go to the next slide here. The next one, sugar, started slavery. It came to the New World with colonies, and the South was producing cotton, and it was being textiled in England and in India. So the Brits were at the center of this. That was the key of the British Empire. They could defend their waterways with their navy, and out of that came the trade in cotton. Manchester, England produced fortunes for people called King Cotton back in the 1800s. This was 1700s, 1500s, 1600s. And then we have crude oil. Notice the price is kind of going down right now. Crude oil. And the next one is rice, which is just beginning. You are in the water business and you elect to convert that into starch. You at the beginning of the next empire, and it will take mankind probably 100 years to solve the water problem, okay? As far as a commodity goes, it's just a cash commodity for everybody. In Asia, it is life itself. A Zen master said, when you boil your rice at night, know that the water is your life. It's not rice, right? Rice is important only because of the water thing. Next slide. Water is rice. The global spice trade, I've been through this. We can just keep going, Stu, that's fine. Okay? And we get down to water. Now, how do you solve the water problem longer term? That's going to be these people in the room that are experts in water. I was talking to Jason last night. We don't have the solution. The temporary solution is to turn the Pacific Ocean into a huge grain trading movement back and forth of grains, because grains are virtual water. Because if you don't have the water, you can import it. I have thought for a long time that soybeans are not soybeans, they're water in Chicago. You're trading 14 to 20%, 15 to 20% of China's water use as beans. Okay. It's going to continue to grow. Now they're importing beans for one reason, because they have hogs and they need to feed them, and they can't feed them from their water and land. They're going to increase rice a lot. At the end of I'm going to compare beans to rice. They're going to increase rice a lot for one simple reason. The people don't want to eat what's being grown over there. It's not an issue of too many people. It's an issue of too much toxic land. They have cadmium. 20%. Frank Bragg was telling me last year, Hunan province is thinking of shutting down its production How do you shut down the production of rice in the largest area? Well, you start out by slowly increasing the buying channels. What China is doing is creating buying channels for rice and soybeans using the same template. Rice is going to go the same direction as soybeans. Every year they're going to buy a few more grains of rice. Every year they're going to buy a few more grains of beans until their hog herd is fanned out. By the way, cotton trade has reduced the amount of sheep in the world. Because back in the Middle Ages it was drab wool that people wore. Then cotton started up and you could put colors on it and revolutionized the world. It would take 6 billion sheep to produce wool to clothe the world today. But with cotton, we only need 1 billion sheep. So we would know a lot more sheep than we do if we didn't have cotton, okay? So what happens is as these commodities go along, I'm trying to tell you, the technology changes, okay? So you're going to see technology that we can't conceive of to solve the water problem. But we're just at the beginning of it, because water's free, like air. Water has no cost to it. That water cost has to go up. We are like the 1960s in water, when the price of crude oil was at $2. Nobody was making any money off of it. It's going to go up in multiples, and as it goes up, the cost of food is going to go up, and they're going to have to rely on the technology that's at this meeting here and in other countries to help solve the problem of water. But until that happens, trading is going to solve it. Trading was always the first one to solve. Spices, sugar, cotton, crude oil, and now water. You trade your way out of a problem short term. That's the purpose of world trade, okay? So you're going to see water costs go way up. Next slide. Okay, now we're going to go back to the simple facts of the market. I'll come back once more to this empire concept, and then I'll turn it over to Stuart. The market itself, go on, Stuart. We call it SWOT. Strengths, weaknesses, opportunities, and threats. Strengths, reduced plantings, lower rice yields in the U.S. The China protocol is pending. Dwight was saying, or I guess it was Ray was saying, we don't know when China will buy. Again, I think down the road we won't be asking whether China's buying, but which city we're selling to. That will happen within the next 5 years because of demography, not because of politics. Improving Middle Eastern markets, El Nino drought, we've been through that. Futures are bottoming out. I tell you, futures are bottoming out. Since 1981, when I joined Uncle Ben's, I nailed every bottom in the rice market. We are at a bottom. We're not at a bottom in the price today, but we're at a major bottom in rice, and I hope to convince you of that. Go on. Weaknesses. We've got a strong dollar. That's strong economic headwinds. Prices in South America would be a lot higher, except that Brazil's a basket case, and their currency is another basket case. Volatility, but in a bearish level with no profitability. Greg was talking about that, no profitability. Cash market has been weak so far, but coming up. Our advice at the May lows was, this is a major, major low. The market's going to 13, which is exactly what happened. By October, it went to 13, and then I was saying, how about 11? Why not $11? Give the buyer an opportunity, okay? And people said, how can it go to 11? It's at 13. I said, when it was at 9, did you think it was going to go to 13? And the answer is no. This is what we try and do, is think outside of everybody. Everybody wants groupthink. You don't solve the markets by thinking like other people. You solve the markets by focusing on the market. Okay, can you hear me in the back? Good. Okay. No change in futures liquidity. I'll come back to that before the end. Our mechanism is broken for futures. Go on, next one. Lower Asian rice production. Nobody knows for sure. It's such spin out there as to what their production is. Lower South American production. Most likely production this year will be down because of bad growing weather, similar to what we had in the United States. Lower Central American production because of El Nino drought, northern part of South America. Farmers around the world are really, really uninterested in these price levels. It's not just in Arkansas, it's all over the world. Next slide. Threats. The world's largest importer is devaluing its currency, but it needs rice. I don't care where their currency goes, they're going to need the rice. We are seeing the cracking up of the Chinese empire. We've got a cult of personality going on in China, but I don't think it's going to make it happen. that's not going to be able to solve their problem. It's demography. They got no people. They got no one to take care of people. They put in this one-child policy, and they took it off 15 years too late. Sorry. Our labor in Mexico is 50% cheaper than China right now. Where do you think manufacturing is going to head, like overnight? We are surplus in food. We are going to be balanced in energy. Okay? We are already exporting crude oil. We are separating out in terms of that empire of energy from the rest of the world. And if it fractures and some Iranian shoots some Saudi and the price goes back to $200 a barrel, our energy prices are going to stay where they're at. They're not going to go up because our congressmen are going to ban the export of crude oil and insulate us. We are going to be the most powerful country in the world with the lowest input costs in the world, except for water. We've got the same problems. I've been talking to people like Jared and others. We got some problems here that we need to solve in the US. We got the technology and we'll have the money to do it. So even the threats are not severe. It is severe. The El Nino is severe in breadth but not in depth. The Indians have been very lucky with their warm ocean temperatures that they didn't get hit as hard as people expected. We got quality problems in the US. Demand in Latin America is going up and we're losing share in Canada, in Mexico, everywhere else. Until the industry finds an answer for the quality, we can talk about a strong market, which I will, but we're a weak supplier. Next slide. Our major threat is ourselves, usually is. Okay? Negative factors. I'll start out with negative factors, weaknesses and threats. The current long grain prices just don't make any money at. But what would $2 corn do to you folks? This is not a pretty market. What would $2 corn do to your balance sheet? I talked to a guy last night. I don't plant rice, I plant corn. I said, yeah, well, what would $2 rice do to you? $2 corn do to you? $2 rice won't happen. If it gets down towards that level, we'll start increasing our exports. U.S. demand is threatened by Asia and South America. What is new? It continues. Go ahead. World prices. There's no profit anywhere in the world without subsidies for these current rice prices. So U.S. demand may be off a little more in the U.S., flat, but imports of foreign rices are going straight up. What are we doing as an industry, folks? Our competition is coming in and selling more, but we're not. The U.S. demand's flat. And imports are getting higher, and we're losing share in Latin America. I'm not here to paint a pretty picture, but I have some hope in this thing. Okay. Will acreage increase for rice? If we have $2 corn, what do you think is going to happen come planting time? Going to plant more corn in the South? Irrigated? I don't think so. I already know that Mississippi's acreage is going to be up. Next slide. So if you guys want to jump out of a window with your banker, go ahead, because that's where I'm at right now, okay? Just kidding. Okay, now let's talk positive. I'm a pathological optimist. I'm a small businessman. I always see the glass half empty. And thank you for the glass, Josh. I can't even speak without water. I speak on water, but I need water in order to speak. There's got to be a message here somewhere. Okay. Positive factors. World supply at the lowest levels in 4 years. I'm going to move through fairly quickly on this whole thing if I get my Apple Watch to turn on. Steve? Okay. World supply at its lowest, but stocks are at the lowest level to use in 25 years. Rice is the only positive story out there, and you've heard it from many, many people, not just me, in the whole commodity world of agriculture right now. I don't know, maybe Bing cherries or strawberries are good. I don't know about that. Over here, opportunities. Asian countries are expected to increase imports in 2016. That's the aftermath of the, hey Stuart, the aftermath of the El Nino. Philippines, all these people. They're never going to tell you how much they import. They're buyers, okay? Thailand stocks to plunge. I'm sorry, I don't think Thailand has as much good rice as they say they do. But if they knew, they'd be putting more people that are VIPs in jail. If you go to jail in Thailand, you're going to clean out the sewers in Bangkok. Not a good idea. They have a political problem in rice, not a stocks problem. Peak rice in Asia, regional export surplus falling. Did I say the regional export surplus will fall in Asia? If China buys more rice and they ain't got no stocks and they're producing, Thailand wants to cut their production by 5 million tons that year. That's what about the size of our U.S. crop? Go on. Okay, very quickly. Here's the problem with corn. We produced an extra 200 million in the last 3 years. That 200 million tons is in South America, China, the US, God knows where. And it has to be moved and it has to be traded. I'm not a bear on corn, I just don't see how it would go up. Rice, on the other hand, if you look at that chart, that's a chart of the yield, harvested acreage, and the yield. Rice is flat, and they have hurled billions of dollars to increase rice production in Asia. Asia is not trying to produce less rice. They're trying to produce more because the demand is going straight up, okay? So what does that do? Next slide. What it does is this chart, it doesn't make any sense. I've got a master's degree in economics. I have been doing this for 15 years on my own and 15 years for $1 billion company. And this slide doesn't make any sense to me because what it's telling me is we're at the lowest relative level of stocks in 25 or more years. Okay? So we got the least amount of rice out there in the world, and the price is down asleep, and everybody comes up to me, where's your bull market, Milo? And I say, it's not my bull market, it's not my market, it's our market. And you see that something's happened. The net trade in Asia is sort of topping out. If you believe that, it's sort of topping out. That move up on the black line from 1990 through 2014 is our killer, because that made India very important, and they export rice, and they grow it. They grow it for $3.50 a bushel, while China grows it for $9 a bushel. Chinese are the good guys, the Indians not so good. But now, notice how not only is the yield and area for world rice turning off, but Asian surplus. That's what you need to focus on now, because we're going to grow enough extra rice where the two markets are going to have to come together in 2016. I won't give you an actual figure on acreage probably for a couple of months, but it's got to be up unless corn goes to $6. But I think the risk is it goes to $2, unless someone can give me some statistics I'm not aware of. So I think what's going to happen is that black line is going to start falling more, because what it's going to do is China's going to buy more and more rice on the world market. They're setting in $100 million ton trades with everybody but us. We feel really lonely, but maybe something will change. Dwight, could it change? I don't know. Okay, so that doesn't make sense. Because you can't have low prices, collapsing stocks, and collapsing exports. Something has to give. And most likely the price is going to give within the next 12 months. I'm not predicting tomorrow. Right now, in the futures, we've got the weekly price on March above the 50-week moving average. We've got the daily trying to get up through it, forming what could be a flag. Flag says up. When it goes up, you'd better start selling. Next one. Okay, very slowly, start one thing at a time. This is soybeans. All during that run-up in the imports of soybeans into China, I had all these gurus telling me, that's it, they're going to buy less soybeans next year. Oh darn, December was supposed to be a down month for China, record imports of soybeans. Hello, does anybody understand what's happening? The trend is what? The trend is your friend. The trend in beans is up, okay? So that started back in the year 2000. Between 2000 and 2011, soybean imports went up by 13% per year. Listen closely. Soybean imports into China went up by 13% per year. If you take that whole trajectory, it's 185% per year. So what happened was they got their logistics out. I bought rice all over the world, 6 million tons. So I know something about buying, and you don't go in and you buy a market till you've massaged it and created it and set it in motion in the way you want to work, and then you don't just go in and run the price up. You do it slowly, okay? Okay. I don't know when that thing will top out. What's driving that is hogs. Yeah. Hogs are driving that demand, okay? Now, let's look at rice. The blue line is the rice market. Very erratic. Imports into China are very erratic. They went up, they went way down, and then they finally started going up. And in 2006, they started importing the incredible amount of 1 million metric tons of rice. In the old days, that was a lot of rice. Now people say they're importing 6 million, so who cares? There's too much rice in the world. But look at the pattern. Look at the pattern. From 2005 through 2011, they have been importing rice at the rate of 12% per year. Keep that thing. They did it in beans for a decade. They went at 13%, and then they just started shooting up. This year, legal imports, which are only a small part of what they're buying, are up by 30%, 30% this year. We're now moving into the next scale up in imports of rice into China, and I don't know where it will end. Now, why are rice imports into China going up? Are there too many people and not enough rice? China is buying rice on the world market because they got a problem with the rice itself. There are many, many farmers over there that don't want to eat where they grow. Does anybody know a farmer that won't eat what he grows here in this room? Has anyone met a farmer? We're talking millions of farmers that don't want to eat the stuff they grow because it has toxic chemicals in it, and they don't want to feed it to their kids. They can control their society, but they can't control people setting themselves on fire over the food. Okay? They can keep that out of the newspapers, but it continues to happen. This isn't a religious issue, this is a food issue. We have the freedom to buy rice from Chile or China or anywhere in the world we want. That's not there. China doesn't have that freedom, okay? So the basic element of my argument is that China is going to try and use world trade to overcome a problem with toxicity and water and population and labor cost. They can't solve it. Next slide. Okay, very quickly, because I invite you to give me your name and I will send you a copy of the annual report which spells this all out. We have reached a major primary low in rice. I'll tell you how primary the low is, very primary. Next slide. This is my view of where the market's headed. We've got a 50-week, we've got a 200-week moving average running down the long-term trend line. So that is going to determine. If we make it through that downtrend this year, which I think could happen, it'll be because those prices in Asia start moving up, okay? Otherwise, we'll probably go back and make a double top this year. This year, next year, that line will be taken out. I will bet a steak dinner with people that by 2017, that line on rice is going to be taken out because rice is moseying up and oil and crude oil and energy going down because we're at a major empire change in commodities between energy and water. And rice is the most important link. It is the biggest customer for water in the world. And it's the biggest customer in urbanization in Asia. In the next 100 years, US technology, which fights Mother Nature, which what Greg talked about, is going to be one of them. And the other is going to be urbanization in China. There are no other trends, just those two trends. And rice is right in the middle. 70% of all the irrigated water use in China is for rice, nothing else. Remember, when you boil your rice at night, the water is your life. It ain't about the rice at all. It's about the water. And the only other thing you can do for water is let people get thirsty, which doesn't last very long. You can get thirsty for a while, or you can send them away, or you can import the junk. There's no third alternative. They have been checkmated. And their demography is going to create social chaos could be tomorrow, with less than 5 years. China, other than Mao, China has had 2,000 years of history of civil war. Okay? Civil war. Next slide. Rice is at the lowest price in real terms in 44 years. Okay, next term. Okay, in terms of futures, whenever the futures make a big volume bottom like that, it's a major low in the price. So there's one good thing about the futures market. It tells you when the low is there. The bad thing about futures market is you can't price your rice at harvest. Oh darn, you can't price your rice at harvest. We need to relook at the rice futures contract because it is totally and utterly dysfunctional. It is the only grain in the last 15 years that has changed nothing about the contract design. All the rest have changed. Wheat has taken off. It's changed 3 things in the contract. I'm not talking about international trade. I'm just talking about getting the contract right. And I've challenged all my subscribers, buyers, 50% of my customers are buyers, 50% sellers, regulators. Let's look at the futures contract this year and say, how can we make it so that a farmer can hedge his rice when he plants it? Which you can't do now. Okay, that's it.